Hello, welcome back to Unicorn Investing. And today I want to share with you a very powerful but yet simple investing mindset that will help the average investor maximize their investment returns. So I think most investors acknowledge that the most powerful style or powerful strategy of investing is long-term investing. To invest in the stocks that will grow for many years, the likes of Apple, Google, Facebook, Netflix, and perhaps the most famous investor that made long-term investing so popular was none other than the legendary Warren Buffett. I'm glad he's still alive today, already in his 90s. But Warren Buffett is perhaps the greatest, if not certainly one of the greatest investors of our time. And one of the most important characteristic of his investing is to have a set of permanent holdings, so-called permanent, and we know some of his stocks like Coca-Cola, Procter & Gamble, very famous. These are some of the stocks that Warren Buffett has invested for decades. And these businesses are still growing. You know, it's amazing. They have been growing for decades and still growing. So a very important strategy to successful investing is really to identify stocks that continue to grow because of their market dominance and competitive advantage, that they continue to grow for years, better still for decades, and to hold on to them and not sell off, not take profit, and so that's exactly what Warren Buffett did, and that's how he compounded his wealth. And the power of compounding, it's just so powerful. And but the problem with the long-term investing, why it's so simple but yet so few people do that? I think one of the main problem is that it is human nature, a very human nature for us to have the temptation to want to sell off and take profit when a stock is at their all-time highs, right? So today, I want to share with you how to overcome this temptation to sell a stock when it has achieved historic all-time high. Because it is very human nature to want to avoid pain, right? Because if a stock achieve all-time high, and then after that, if it crash 10, 20, 30%, that's a lot of pain, because it is so painful to see all your gains wipe out. And even more painful if you bought at all-time high and you have the bad experience of seeing your investment suddenly depreciate by 10, 20%, 10, 20, 30%. It's very painful. And a lot of investors have experienced such pains. And because of that, a lot of us mentally conditioned to want to take profit to when our investment achieve all-time high, right? Especially if you know that this stock previously crashed 10-20%. or even 30 or more percent down from the previous all-time high. And so it would be very common that if it get back to its all-time high, it is very, very tempting to want to avoid that pain, right? That possible potential pain that if the stock is going to crash again. So it is very human nature to want to avoid that pain. Totally understandable. But yet, you see, very few investors realize that very few investors are able to time their exit, right, just at the peak. And it is very common that when a stock, especially if a stock break all-time high, all right, especially if a stock break all-time high, and it broke all-time high after a period of consolidation. In fact, the longer a stock goes through correction and consolidation, all right, let's say for months, 3 to 6 months, or even 1 year, or even sometimes 1 to 2 years, you know, the longer a stock consolidate, the longer a stock corrects and consolidate, the further it will go after it breaks the historic high. Few investors realize that, and many investors, many average investors would want to avoid that pain, and they exit once the stock reach a new all-time high. But actually, that is one of the worst times to exit, you know. And you know, it's also very common that after you exit, all right, when the stock broke all-time high, and then you see the stock, you know, continue to surge, it is very common for people to buy back at a higher price. And worse still, after you buy back at a higher price, then the stock start correcting. So you can't, some investors will feel, how come so soon one? Once I buy only the stock go down, you know. So but anyway, just jokes aside. So how do we hold on to a stock? And you know, the problem is if even if we keep buying back, even if we keep buying back at a higher price, all right, and we stay invested, do you know that, let's say over a period of 10 years, all right, let's say a growth stock like Apple, Microsoft, it can 10 times, all right, if you check the last 10 years, Apple, Microsoft, I'm not sure what other stocks, but they actually 10x your investment. Now, if you tend to sell off at a new high, you know what? It can easily cut your investment gains by half. So instead of 10 times, you may only see 5 times investment returns over 10 years period. So one of the worst mistakes an investor makes is to sell off at a new historic high. Now, today, so I'm going to come to the important part now. How to stay invested, okay, for a growth stock especially when it keeps breaking high after highs. All right, breaking a new high and breaking another new high. All right, I'm not saying that it breaks new high, it keeps breaking new high at the same period. It can be breaking new highs for the same period or for a different period. But the important thing here is that if it is a permanent holding, how are we able to hold on to the stock? So the important mind hack here, is to learn to trust the people who are in leadership, the people who are managing the business. Learn to trust the people who are managing the business. Once you have identified a growth stock, and once you have recognized a great company, a great business to invest in. Like, for example, I keep mentioning some of these names like Apple, Amazon, Tesla. There are a lot of other names. I have invested some of these other smaller growth stock like the Trade Desk, even MDB, Zscaler. There's quite many. There's a long list of growth stocks that is worth investing now. But the important thing is, for us to trust the managers, to trust the leaders, the founders, instead of trusting our trading skill. You see, when investors try to sell at the peak, they are actually trusting their own trading skill more than they trust the founders of these great businesses. Imagine, right? You have Jeff Bezos, the founder of the business, running the business, and the stock keep breaking new highs. At that point, you got to ask yourself, who will achieve better results, right? Do I trust the founder or do I trust my own trading skill, right? Do you know enough about your trading skill that you know that you are able to always sell at the peak and then buy back at the bottom? Do you know yourself well enough to trust in your own trading skill? That's the question I want to ask you. The fact is, if we are brutally honest with ourselves, none of us can consistently sell at the peak and buy back at the bottom. No, none of us can do that. That is why a simpler strategy with higher success rate is to dollar cost average. You see, it is so much easier to buy at the bottom than to sell at the peak. All right, it is so much easier because if you keep buying when the stock is falling, is crashing, sooner or later you'll be able to buy at the lowest possible price. So the important thing is to learn to trust in the founders, right? So it is important that, you see, in the first place, we must not buy companies that we do not know, and companies whose management and leaders we do not trust. All right. So once we have done enough research and study to know enough about the business, know enough about the leaders. For example, you happen to invest in Apple during the time of Steve Jobs, the legendary entrepreneur. All right. Who are you to trust? Steve Jobs, or to trust your own trading skill? I too was an entrepreneur. I used to run a very successful business, and a lot of our customers trust me. A lot of my employees, they trust me. But I know that these great companies that I now invest in, they are far greater than the business that I founded, the business that I run. And I know that these leaders, these founders, these entrepreneurs, like the likes of Elon Musk, Mark Zuckerberg, Jeff Bezos, Steve Jobs, and now, of course, we have Tim Cook and Jack Dorsey. Many of these entrepreneurs, they are great entrepreneurs. They're far greater entrepreneur than me. I am able to trust in them fully. All right. Even there are ups and downs in the company's history. There is no 100% perfect execution. All right. And the stock can go up and down, but I can trust them much, much more than I trust my own trading skill. Right? That's the important thing that we need to realize. Okay. When you try to sell at the top, you're telling yourself, I'm a very good trader. I can always catch the peak. But I'm telling you today that it's far easier for you to trust in the leaders and the founders that you invest in. So just be patient, like Warren Buffett, all right? He said this: the stock market is a device to transfer money from the impatient to the patient. And what we need to do is just very simple. To maximize our investments, be patient and trust in these great leaders and businesses that we invest in. And if you don't believe, you don't trust in them, don't buy them. Don't invest in these companies. All right. So I hope you have gained some insight from this video, and hope to see you maximize your investment returns, right? And I catch you on the next video. Thank you.